It's Mary Ellen McGonigal here, and I hope you guys stuck around. I had the time wrong, and I apologize. I do want to dive right in here and okay, guys, it's Mary Ellen McGonigal here, and we're going to go ahead and get started. Hopefully, you can see my screen there. We are looking at initial page here for stockcharts.com, and gosh, I am running super late here. Fully prepared. I do want to share some information for those of you that are still here in the room and watching live. Let's go ahead and dig right in here. And I want to start by sharing with you the broader markets and where we are standing relative to that. I'm going to share with you a view of the S&P 500 and marked up chart here. And from there, we'll take a look at some of those other broader market indices and lots more to share as it relates to what's taking shape here in the markets with sector rotation and a lot of uncertainty here in the markets. So the broader markets, here we are with a daily price chart of the a daily price chart here of the S&P 500. We're going to start here, and I was mentioning earlier, also going to take a look at the Nasdaq. So, Duncan, great. Gosh, guys. Yeah, so here we are. I wanted to share a couple of characteristics that are taking shape. The daily chart here, the S&P is continuing to find support at this upward trending 10-day simple moving average. That is good news. And then our outside momentum indicators are also positive. So while the markets are somewhat flat for the week, the uptrend does still remain here. And then from here, we're going to take a quick look at the Nasdaq. And of course, the Nasdaq has been a leading index here. Growth stocks certainly in January, and then more recently they're faltering just a bit here, also flat. So the Nasdaq, a key level here is that 12,000. We are just ticking above that at 12056. That's good news. This is a very key area if we were to break below that of resistance. Ideally, we want to break up and away from that. We do have positive momentum here with that RSI and stochastic. So both of our broader market indices are in good standing. From here, I did want to share with you some other views that are really going to be quite helpful as far as helping get a sense of where we are here in the markets. And I'm going to share with you a sector summary candle glance. It's a 2-month daily price chart view. We are going to sort that by RSI in descending order. That did not shape up nicely, but here we are. So what I'm sharing with you is the 11 sectors, a 2-month daily price chart view, and it is ranked here and sorted by strength to weakness. And we are seeing these defensive areas sitting up here at the forefront. This is healthcare, had a nice downtrend reversal last week, and it is outperforming again this week. Staples, not as interesting, but they are in a nice uptrend here. Also nominally outperforming. So we are still seeing a flight to these more defensive areas. However, there is one area this week that is continuing to outperform, and that is energy. Top performer here, up almost a little bit more than 2.5%. And I will share with you ways that you can quickly assess precisely where in energy that strength is taking place. This gap up had everything to do with a surprise announcement of oil production cuts. And since then, there's been other vibrancy within that energy space. There are select areas within energy that are faring quite well. Technology flat here this week. It did stumble last week. A lot of that having to do with semiconductor stocks that are waffling a bit here. We are going to take a look at the semiconductor group because it is making up some of that loss. Last week, semiconductors were down 5%. They're making up some of it, but not all of it. So we can see that this leadership group is in a period of back and fill where it is marking time. We have not entirely lost that upside momentum in technology, but we can see with this MACD that a black line down through the red, that crossover, can oftentimes be an early signal. We can go back to this sharp rally January into February and the view when that did pull back here into mid-March. So at this point in time, we are seeing that MACD crossover, a little bit too early to tell us if it means we are going to see any kind of a pullback, but you are going to pay attention to the volume characteristics. If we do begin to see higher volume on down days, that is with volume higher than the prior day distribution. We don't want to see a lot in the way of distribution days clustered together. So that is the leadership healthcare. Now, what I did want to share with you today is the fact that this week we are seeing some of these economically sensitive areas of the market come back to life a bit. This is XLB, the basic materials, steel stocks. These, again, areas that when the economy gets going, they will fare well. A lot of this has to do with comments from Treasury Yellen yesterday, who talked about the global economic outlook looking constructive. So we did and are continuing to see a move into basic materials, industrials. Both of these groups are up over 2% for the week, but they are not quite out of the woods yet. This is what I'm sharing with you is the fact that there is a lot in the way of cross currents. There's an awful lot of uncertainty out there. What will the Fed do at their meeting in 2 weeks? Where do we stand with earnings coming up? And we do still have another big inflation report that is due out. So let's go ahead and move along here because I did want to share with you, this is XLY, and that is consumer discretionary flat for the week. And this is all about fears of a recession. We are seeing a pullback in some of these areas, particularly auto stocks and so forth. But from here, I did want to share with you a retail ETF that is XRT, the S&P 500 retail ETF. It's struggling here, but on the lookout for, there are some bright spots here in select areas of retail. So I can carry on if there are any questions, but there is quite a bit more that I am prepared and look forward to sharing with you here. So let's go ahead back. I'm going to access that list that I put together for today, and we can take a look at some of the other areas of the market that we haven't covered. So I talked to you about semiconductors. Let's take a look at a chart of the semiconductor industry. See if I can well, we can go ahead over to this view here, and this is a broader daily price chart of semiconductors, SOXX, currently finding support at this 50-day. I'm pulling this up because semiconductors had been a leadership group. They were one of the top performing areas in January. They had a very significant rally March into the beginning of April, but they are faltering at this point in time. And these stocks are cyclical, so they are also going to be economically very sensitive. So when we see these recession fears move to the forefront, oftentimes you may see this area potentially stumble. So we are in that particular period. Let's see if I can get back to my chart list because I do want to share some other areas and point out some other action that is taking place here in the broader markets. So we talked about healthcare, and one area that is beginning to turn around within healthcare, and that is biotech stocks, IBB. And there are over, gosh, maybe 800 names in this group, but we can see a nice downtrend reversal that took place last week and is seeing a continuation rally, your momentum shifting into positive territory. So this is something of note. Biotech names did fare well during the '08 recessionary period. It can be risky, but it also can be viewed as defensive, such as healthcare in line with that. So the point here is that that move into the IBB ETF is a bit defensive. So there are Earl comments on the daily squeeze for XLF. Let's take a look at XLF, and anyone else that has questions, we can certainly review that. So here we are with the group trending upward, and I'll take a look here. Yeah, it is up 1.5% for the week. We can see that the XLF ETF, which is financials, the momentum shifting here into positive territory. We're not quite there with that MACD yet. So from here, when talking about a daily squeeze, let's go ahead over here and we'll take a quick look at an intraday chart. And then, gosh, I do want to make sure I'm not stepping on any toes here as far as the room still being available after 10:30. If it is still available, I will carry on beyond. I was due here 10 to 10:30, and I just am messaging to see if I can stay here and continue because we really are just getting started. Uh, Super. Thanks. Appreciate that, Lorna. Okay, let's carry on, and I always appreciate your questions as well. So, let's take a look at XLF, and there was a comment relative to this squeeze that's taking place here. I'm gonna go ahead and pull up an intraday chart so that we can get a little bit more in the way of color. So here is a 15-minute price chart of XLF. And we are seeing that squeeze here on that 15-minute. We have that MACD black line up through the red. Nice high volume here, not exceeding, unfortunately, the downside that occurred on the open. But we are in an uptrend here. Your RSI up above 50 and trending higher. So it looks fine. We are going to be on the lookout for you when you are, because we can go back historically and take a look at this price action back here, that similar squeeze, and you will want to be aware of what to be on the lookout for to signal that that upside momentum has shifted downward. First up is a move. This is XLF on the 15-minute. If we break below the 5 and the 13 simple moving average, heavy volume here, and then your momentum shifts, the RSI turns negative. But for now, not overly compelling, but it is still in an uptrend. That was XLF. And then the other question, and Lorna, great. Thank you for that information. So Coop is asking, do we have more upside in MARA? And I'm not totally, I'm not familiar with this stock, but we can certainly take a look. Yes. Okay. So I am going to ask for what's called a full quote. We're going to update this chart, and this is Marathon Digital Holdings. And we can see that it has, and in fact, I believe, Coop, maybe you did ask about this. This chart is ringing all kinds of bells because we were looking at it back here as it was below that 200-day marking time back and fill, except your momentum stayed positive. On the lookout for a move back above that 200-day, and we did get that. Super nice volume here, and your shift into higher gear with the RSI trending upward and your MACD having that crossover. Now, we're not still seeing that momentum. I'm guessing it might take a bit to come into shape. Ideally, we want to see this type of movement in that MACD indicating a more powerful upside move, but all in all, we are in good standing here. It is a little bit stretched now above that green 10-day simple moving average, so you may see a little bit more in the way of a period of digestion or consolidation, but the upside is still looks good, Coop. I like it. So let's see. I want to carry on because the topic today, we are looking at the state of the markets. So what I'm going to do is very quickly pull together a list of ETFs that are highly useful and very relevant as it relates to getting a really good sense of where the markets are. And then from there, I'll share with you, I talked about this before, we're going to look at names in these areas, how, for instance, energy, and how you can quickly get into and quickly uncover those stocks that are poised to trade higher within a given industry group. So what I'm doing right now is populating this list that we're going to be looking at here relative to the underlying markets. We want to get a very good sense of which areas are on the move and trending higher. I talked about those economically sensitive areas that are faring well this week based on comments from Yellen. So we're going to cover that as well as the broader market indices. So again, we're going to add a relative strength indicator to this 2-month daily price chart view. And again, strength to weakness, and take a look. The Dow is outperforming. It's up 1% this week relative to other areas of the market that are flat. So that is good news there. And so as we move forward, I'm going to share with you some of these other areas. This is that move in oil that I talked about, the supply, the production levels being reduced. We did see a healthy jump there in that price of oil, and it is remaining elevated. Gold also on the move. This is a bit of a safe haven play, but gold does fare well during periods of potential recession. So in essence, we are getting a lot of cross currents, but this week, those economically sensitive areas are rallying while the more defensive areas are also holding up quite well. So let's take a look at another area within technology that I cover very closely, and that is software. This is IGV, the software ETF. Super strong in January, very strong in March. Here we are in the beginning of April, a bit of a pullback. And this is what I talked about relative to that move away from some of these growthier areas. We'll take a quick look here at yields. This is the yield on the 10-year Treasury. You can see just an awful lot of bouncing around, but net interest rates are trending a little bit higher this week. And but still on a relative level, they are quite low. So let me from here take us over to the Dow, and I will share with you some of the areas in the Dow Jones that are on the move. I talked about that Dow outperforming. So what we are going to do is take a view of those charts. We're going to do the 30 charts that are in the Dow. Again, adding that relative strength, we want to see where that strength is in this index that is outperforming, and go ahead and update that. So here we are with your stronger names within the Dow appear in the forefront. And we can see defensive areas. I talked about staples. This is Procter and Gamble remaining in a very confirmed uptrend. Coca-Cola, these also offer nice high yields. But we also have select retail area. This is McDonald's. Not sure if any of you are out there and are familiar with my MEM Edge report. This is a name that we did put on the MEM Edge report back here. It is a stock. Of course, we're all well known, but it is also, in addition to experiencing something in the way of growth, McDonald's also is defensive because it is a discount retailer. Walmart is another name here, discount retailer in a nice confirmed uptrend. Both companies have other reasons for faring well, also due to as by way of reducing their staff, putting systems in place, and so on. So let's go ahead and move down. I did want to share with you areas that have more recently moved up here to the forefront. And first up is Chevron. You will see, we'll take a look at Exxon as well, reversing that downtrend as the price of oil has been advancing. Let's take a look at another area. I talked about industrials that are on the move. They're up 2.3% this week. And here we are with Raytheon. RTX is the ticker symbol. Nice gap up 2% today. And we can see that MACD just now entering into positive territory. So this is actually a very attractive chart because we have positive RSI as well. So defensive areas, industrials. This is an aerospace defense stock, and they are anticipated to fare well. We can look at, actually, I don't want to get too far away from that list on the Dow. I did want to share with you a couple of other stocks here that are on the move. We looked at Chevron by way of energy. Let's take a look at Exxon, and these two are the better performers here in this energy space. That gap up on that oil production reduction news and a back and fill formation that is taking place here. So guys, if you have any questions, any areas that you would like to see covered, but I did want to just take a quick look here because a couple of other names that are perking up this week. This is Nike, NKE, and of course the famous, world famous athletic wear, footwear company. And this within retail is an area that is really picking up. There are three other names, if we can get to that, I will share with you, that are breaking out of bases and exhibiting very superior price action this week, and they are in that group. And then from here, we get into those weaker names, such as JP Morgan, bank stocks, Caterpillar trying to reverse this week. This is a very economically sensitive stock, big name in that industrial space, attempting again to reverse its downtrend, but still flat for the week. And Earl, yeah, we can take a look at the SPX again and talk about macro views and so forth. That's a great question. I really appreciate that. Let's go ahead. I want to get back to that list because I'm not sure why it's not cooperating, but I did want to share with you, I had some longer term views set up for the S&P 500. If not, we can just look at it without the marked up charts, and I can share with you what is shaping up and taking place here in the S&P 500. Let's go ahead over here. And yeah, so here we are with a weekly view of the S&P 500. So when you're looking for a longer, and TD, yeah, best way to play biotech, would love to share that with you. It's an area of the markets near and dear to my heart. If you can get those names right, you can really experience some nice gains. But on the weekly chart, when you are looking for a prognosis, you are looking to get a good feel for the markets longer term. Oftentimes, a weekly, and then we will pivot into a monthly chart, can be very telling, and you want to use history as your guide. So a couple of things that I am pointing out here with the S&P 500 on the weekly chart. This is that super strong rally, of course, coming out of that 2020 bear market, and then the beginning of 2022, when this current bear market began to take shape. So what I did want to point out as it relates to whether these downtrend reversals have legs and will continue to take off, you do want to pay attention to these momentum indicators here on the weekly chart. And ideally, what you are on the lookout for on the weekly, when that RSI trends into positive territory, coupled with, this is stochastics, a faster moving momentum indicator. And in this case, both of these times that it did occur last year, it pointed to an additional 3-week rally before pulling back. 3-week rally, pullback. The difference with this pullback is that your momentum remained positive. So we did have that occurrence take place again recently. 3-week rally pullback. So here we are again with that very similar characteristic where the stochastic turned positive, your RSI is positive. So at this point in time, we are in an uptrend here on the weekly, but history tells us we could only see maybe a couple of more weeks before a pullback. But from here, I am going to go ahead and share with you a monthly view of the S&P 500. And actually, this is what we are going to be on the lookout for. When you're looking at a monthly chart, you want a 6-month simple moving average as your guide. The good news here is that we did break back above that 6-month moving average. Your momentum, however, is shifting mostly sideways on this monthly. We want to get it trending upward coming out of this 2020 bear. You can see you had that very pronounced MACD crossover, black line up through the red. So at this point in time, we are not quite ready for prime time as it relates to a longer term uptrend. Here we are coming out of the 08-09 bear market on a monthly. Again, that MACD crossover and positive momentum shift. So we are barely into positive territory here. We're not yet seeing this shift into a full-blown uptrend. At this point in time, I am still cautious on the broader markets. There is an awful lot by way of cross currents. Are we going to enter a recession? Will it be brief? And from my work at the market, we did have what's called a follow-through day, where a near-term bottom was experienced in the markets, and that did take place back here. However, you do need to have that event that brought us into the bear market needs to be removed, and that is high inflation, and we're not quite there. We did get good numbers today. We have another report coming out relative to inflation. So we do need to see a continued reduction in inflation, but also we need more in the way of evidence that we are not going to have what's called a hard landing and enter into a recession. So, Earl, I'm really being roundabout, but at the end of the day, I am near-term bullish on the markets. I am not yet convinced that we are out of the woods. So I think that we are in for a continued bumpy ride until certainly that FOMC meeting in early May will provide more evidence. But we're in that type of environment. It's the show me area period. We're not in a booming economic uptrending period, but earnings is also being thrown into the mix here. So a lot of cross currents. Bullish near term, but cautiously so. And I hope that helps answered. Good. Thank you. Yeah, so let's go ahead and pivot. That great question about biotech stocks. Now, what I can, of course, shortcut and share with you names that look attractive, but let me teach you how to fish. How about that? We're going to go into, with this view, stock charts. And from here, we are going to go into this sector summary. Let's take a look at XLV. That is the healthcare sector. This is something that is accessible to anyone with a subscription to stock charts, but I believe other charting services would have this. And Jay, yeah, let's take a look at those. I look forward to that. I just sold my AMAT yesterday, so would love to share that with you. Look at those shorts. But here we are with biotechnology. And what I'm going to do, it's going to be an awfully big list, and it might be a bit alarming. On any given day, if you were to pull up this list, you will see these sharp names that are on the move. This is all about clinical trials taking place, good news trickling out. So you will see this is a $1 stock, $3 stock. We're going to get beyond that. And from here, what I am going to do is sort this list by market cap. I do like to traffic in these larger names. And then I want to see it by, actually, that's not going to work, but I want to see it by stock charts technical rating. In other words, these stocks, 99.9 is the highest that you can get, but it's telling you that among these names, these are your better looking charts statistically. Now, when you're looking at biotechs, I talked about the group being about 800 names. Only about 12 of them have earnings, so you will have to rely more on the technical chart than the fundamentals. So let's take a look at this large cap biotechnology stock that has a high stock charts technical rating. It is BGNE, and a couple of very attractive characteristics taking place here. I'm going to go ahead and mark this up and share with you why this has such a high rating. First up here, we can see it has reversed its downtrend by moving back above this 50-day simple moving average on big volume. Now, this type of price action is telling me that on this particular date, that would be last Friday or Thursday, that good news came out. And it's something that I can't get to here, but you can use any number of services to highlight and uncover just precisely what that news was. But more to the point with the chart, it has broken back above that 50 high volume. Take a look. We have that momentum shift into positive territory above 50, and then this MACD just entering into positive territory with that MACD black line up through the line, shifting, telling us that this stock is now in an uptrend. We have other characteristics here I can share with you. And first up is a double bottom formation with a higher low. That's good news as well on the chart. And then also when you are looking for stocks that could potentially outperform, you want to see that it has that capability. It has a history of being a big outperformer. This is November into February, super big mover. So I would tell you TD, that is okay, so and another there is a way to play it without getting into individual stocks, of course, as well. But let's go ahead back and see if we can highlight maybe one other name here, because what I did is this stock charts technical rating, and then quite simply, I'm scrolling down. I'm on the lookout for larger cap names. Biotechs are risky enough. If you get into some of these smaller names, it could be a bumpy ride. So this is EXAS, not important. It does not look super interesting to me. Not sure where we're heading here, but EXAS was the name that came up, and we can see that the momentum is really in a go nowhere period. We're just back and fill. Look how flat that MACD is. So that's not going to be of interest. But if you are not inclined to dig in, you can view and play this simply by the purchasing of the ETF IBB. And this is in a nice uptrend. We're seeing nice high volume on your rally days. Momentum is in positive territory. So this would be a good way. And I'll just share with you a couple of other names within the group that are trying to reverse their downtrend. This is Amgen, a super big name in the biotechs, up above key moving average, but a little bit bouncy here. But we do have positive momentum. that would not be my first pick. I did put a name on my MEM Edge report last Sunday, but here we are with Regeneron, REGN. This is a gap up, also on good news, gap up into a base breakout, kind of marking time, digesting that big move. But again, in essence, the purchase of the ETF is certainly one way as well. TD, yeah. And Jay, let's take a look at shorting Applied Material and Twilio. So I'm going to go over here. And for those of you not familiar, AMAT is a semiconductor stock. We did view the list. The semiconductor group is in a bit of a sideways price action move here, but Applied Material, we can see, has now broken below this 50-day simple moving average, and that now is going to be upside resistance. Let's take a look at some of the other dynamics here on this chart that would make this a good short candidate. First up, we can see that the RSI is now below 50, trending lower, and the MACD is just now entering into negative territory. Now, I will tell you, you can use history as your guide. You can see how quickly, when the group, if it were to reverse, what to be on the lookout for. I would like to see a little more volume on this selling, indicating distribution. So if we go back here historically, as the stock continues to break down, let's go back to the July into August upside reversal and take a look. Super high volume on that selling, indicating distribution. People want out. So we're not getting that high volume. That would give me more conviction on the short side with the stock. And then, as always, if you are looking to short a name, you will want to be very on top of the dynamics taking place within that industry group. So here we are with semiconductors. Applied Material has a very, very similar view, but it is holding support at that 50. But it does not look super healthy at this point. And let's take a look at TWLO. This is a name that I'm quite familiar with, and I'll share with you why. I'll pull up a monthly chart on Twilio. Actually, that's not super telling, but it's had these periods of outperformance. So let's go back to the daily chart here. And I did share with you, IGV is a very good proxy for software stocks. This is the software ETF. And you can see it's acting quite well here. A nice positive momentum here. RSI above 50, MACD above 50, IGV holding support above this 10-day simple moving average. This is another very large group. I believe there's about 380 software stocks. All of them are going to be faring well. So here we are with TWLO, Twilio, and you can see it had this, this is that January rally that was really very fruitful within particularly technology names. But more recently, it has also negative dynamics relative to its momentum. So we're going to mark this up. We can see that we had that shift. The RSI already was in negative territory, but a rather pronounced downside movement there. We have now broken below each of these simple moving averages. So what will tend to happen is your moving averages will then begin to trend downward and then act as upside resistance. So what I am seeing this week, however, is a back and fill consolidation. So this could prove two different ways it could play out. When you have we call this a hemorrhage with a wedge, it's wedging. It could go, of course, up or down at the end. That's a ridiculous statement. My bigger point is when you see this hemorrhage with a wedge, about 80% of the time it will have another leg down. So that's a statistical call on that. So with Twilio, it is looking negative. You will want to see where this consolidation, how that nets out. But what we can do from here is drill down to an intraday chart, get a little more color. I'm going to pull up here we are with that move down. And you can see on this 15-minute on TWLO, it's pretty choppy there. I'm gonna pull up a 1-hour intraday chart here on TWLO, and, again, it does have these rally attempts. It's, ideally, of course, we want to get into this type of phase where the, TWLO on the hourly, the MACD just getting into negative territory, it breaks below those moving averages, and you have that MACD crossover. At this point, we're not set up for success, similar to these two other periods when shorting the stock just as we're getting into negative territory. The MACD crosses over, the stock breaks below the moving averages. You can see how fruitful that trade is relative to where we are now. We've already had that move into negative territory. We've already had that MACD crossover. So I wouldn't I would not say TWLO is set up for success right now, similar to these other periods, using the intraday 1 hour. We've already had that negativity take shape. We do appear to be in a period of trying to right the ship, if I may, a lot in the way of back and fill taking place there. And I believe my time is up here. I want to wrap it up quite nicely in a bow and reiterate the fact that while I am bullish on the markets, it is with a sheer near-term bias is still in growth. This is S&P 500, and the fact that we are in a very, very period with an awful lot of crosswinds. We have earnings coming up, continued inflation reports, recession fears. So a lot of mixed emotions among investors. It's not a place to load up, to leverage, uh, go on margin. But there are pockets. If you pick, we talked about biotech, software, there are areas that you can take advantage of this current near-term uptrend that's taking place. For those of you that haven't already, you can trial my MEM Edge report twice weekly. I have another issue coming out today, and very nominal fee for even if you did it for 4 weeks. I get great feedback relative to the educational value. And that's it. I want to thank you for sticking around, and I'll look for you again here next time. And I wanted to see who is coming up after me, but I'm going to sign out here. Have a great day, guys.